I just realized I wasn't recording this entire time, so I just got the recording started. So just to rebase myself, right? There's a lot of similarities between people. There's a lot of similarities, yes, between last cycle, such as the initial drop, right? There's initial drop, move back up, there's the move back up, and then there's your real drop, a period of consolidation, right? A little period of consolidation, we got that on the weekly here. You can see period consolidation and then consolidation, followed by your next leg back down. You bottom at the 2.24 last cycle. We haven't hit the 2.24 yet, so that hasn't completed yet. We can see many similarities, right, between last cycle and this cycle. However, the one big glaring difference, right, that we've talked about before, and I'm going to talk about again, is this. Previous cycle, there was absolutely zero reason behind why we bounced from here, right? Yeah, we had a little bit of a consolidation there, but that is not significant enough, right? You can look at the monthly, you can look at the 6 months, 3 months. There is no significant enough reason behind why price should have gone and held that. Right, yes, we went there, we bounced off it once, right? We bounced off it once, but ultimately we collapsed because that wasn't enough structure, right, for the market to look at it and be like, yeah, we're gonna enter here. There wasn't enough structure there. There's hardly anything. There's only a few weeks worth of trading ranges here, right? Now I want you to compare that to what happened, right, over here. And this is literally something I said back in 2024. I was saying people are complaining about this now, but this is going to be a lifesaver in the future. I said that so many times back in 2024, right? This is not a simple 2-3 week trading range, right? This thing went on for months. It started in basically late February, early March. It went on all the way through to October. This went on for like 8-9 months, right? That is extremely significant. A historical price action is telling us that there's an elongated trading period right over here where a lot of volume was passed, right? Buyers and sellers were both active. Structure was developed, right? Therefore, when you come to something like this, and this is why I was saying before as well, this is not an optimum time to be looking for shorts on Bitcoin. Not simply because of the fact that it's previous all-time highs, not simply because of the fact, like, technically speaking, we have significant levels, we have buy-seller zones, we have key inflection areas, we have ABCDs from previous cycles, but on a fundamental level, we have a 8 to 9 month trading block, right, where structure has been developed, right? We did not have that before. That is a lot of structure, a lot of volume would have gone there, right? A lot of structure, highs, lows, trading activity. When price retests area of significant structure like this, it is simply just not going to just slice through. It's not going to happen, right? We filled that structure, right, which is right over here. There, hit the mid, right there, and then so far the mid has held, right? And now you're attempting to come back to the highs of the structure. Now, does that mean we're out of the woodworks? No, like, obviously we need to break away, we need to get above the highs of the structure, and even then there's so much work to do, right? Then you have a chance of turning this to resistance, you have a chance of turning this block into resistance. There's a lot of work to be done, and that's just what it is, right? In a bear market, sellers are going to have the edge, right? There's so much work for buyers to do to take this back to an uptrend again. It's going to take a while. However, we can't deny the significance of the area where it's actually bounced from. Right? That is why price has been stuck here, and that is why it's been going just sideways, just chopping up leverage left and right, right? While realistically, the displacement on price has been zero, right? You lost money on the way down, lost money on the way up. If you're trading this wrong, right? Let's say you shorted the bottoms, long the tops, while price is literally just flatlining, right? Because you're at such a significant area. So another thing is, we cannot be surprised if, right, we do get some sort of nice move off of this to like 80s, 90s, whatever, because again, this is an extremely crucial area. And if we go here, we spend an elongated time here and sellers keep throwing supply onto the market, but they can't break the demand from the buyers, and all that supply is absorbed, then the way is going to be up. And time will tell whether that happens or not, right? There is no fundamental way to see that, right? Unless you're looking at footprint charts, and then you can analyze sort of on a candlestick basis, like, how much aggressive selling, how much passive buying is coming in. Use that in relation to your CVDs with spot, right? On something like, oh damn, what's the other platform I taught you guys? Oh, my memory. On Velo, right? Unless you use those in conjunction to get sort of like a clearer picture, it's very hard to actually be like, yeah, buyers are going to absorb this supply, or no, there's no chance, right? We won't know until it happens. All we can do is read the price action as it comes. And right now, yes, there is weakness, right? But there is also signs of strength coming in. It is literally a coin flip right now, right? Whether we're going to go higher or lower. is genuinely a coin flip. It's a 50-50 chance because we haven't broken out of this range yet, right? And at the end of the day, we're still below our weekly VWAP, right? We haven't broken out the range yet. The trend is still to the downside. However, sellers have yet been unsuccessful in actually going and turning the mid of this proportion block, for example, into resistance. Important levels like that need to be lost with force if you want this to carry on going to the downside. Now, if we go and we SFP and we put another lower high in, right? We go SFP again, another lower high, another round of bearish divergence, raise some liquidity to the upside around 76, come back down. The next shot I'll be looking at, like I've said before, is I want to see what kind of reaction we get at that 2.24. We haven't hit it yet, right? That's the first. If the 2.24 is lost, then the next target would be the 2.618, right? We just take it level by level. If that is lost, you just take it level by level. You have your buy-seller zones, you have your historical price action, historical price ranges and key inflection areas. We just take it level by level, but I'm talking in this range in particular. Right now, do we have an edge on a long or a short? I'd say neither. Right? It's literally a coin flip. I'm not going to be doing much in this range. If we SFP or if we look like we've gone up to grab some liquidity from this area and then I see trap traders, I'll look to trade shorts. I'll look to take shorts at the rate, right? Rates are where you're going to get the based entries. Otherwise, am I going to long here? No. Simply because I don't really have an edge, right? Resistance is right above. This is right below. It's not like a 3-to-1, anything like this. I'm not going to be doing much here. I just want to see how this resolves. If we do get that relief rally to the upside, I think also get a nice little pop because they've been so down and beaten up in the gutter. I think they'll get a nice little pop, right? But until that happens, let's just see what happens, right? You know, they could fake this out once more to the downside before giving us that move up, just to make sure everyone's absolutely chopped up to pieces, right? But yeah, let's see. Just understand where we are, right? This is not where you take major shorts, and if anything, right, looking at where we currently are, and you had to choose either buy or sell, I'd probably be choosing buy, right? And that's as if you had to. But just understand, it's not a black and white. It's not just buy or sell. Many times, doing nothing is the best decision you can do. And if you are completely unsure about how to tackle this, how to read this, honestly, my best advice would be, unless you get that raid, right, to the upside, that's your short, or you get that raid to the downside, that's your long. Right where we currently are, it's going to be very, very hard to do anything. They could keep doing this for a long time where we currently are, right? But the key levels was the same we've been looking at. ABCD 2.24, 2.618, 3.14, 3.618. I want to see what kind of reactions we get should we go to those deeper levels, right? But this here, this wasn't here in the previous cycle, right? It wasn't here in the previous cycle. As you can see, that's why this is a significant area, right? And that's also why we can't be like, oh, it's going to follow exactly what we did last cycle. Listen, if at the end of the day, if buyers just keep buying up all the supply here, right? If buyers literally buy all the supply here, they do not let the price go lower. There's a reason why they did that so in this area. We can't be surprised, right? Like, yes, it wouldn't be as low as most people are thinking it'd go. But if buyers do not relent and they keep buying in this area, due to the fact we've got historical price action here, right? We can see that. Due to this fact, then there is just what I'm trying to say is there is no guarantees in this market. There's no guarantees that 43 or 35 is going to hit. I hope it does, right? I hope it does because I would put so much money into it if we went down to these lows again, right? I hope it does hit, but there's no guarantees it will, right? So right now I'm not going to do anything. I'm just watching the price action because, like I said, there's no edge for me in trying to take a trade here. So I'm either going to watch for a raid of these highs, right, to take a potential short, or I want to enter like I've been saying at the lows, right? Maybe one more raid at the mid to the actual tap of the 2.24 that holds, right? Low in price, high low in RSI kind of scenario, something like that. But right now where we are, it's difficult to have like a very genuine edge, right? Where you can be like, okay, there's like a 80% chance we're actually going to resolve to one direction, right? With good risk management. There just isn't that right now. Because you sat smack bang at resistance, right? With what could end up being inverted smiley if buyers don't pick up, with what could also just end up, sending you higher. So no matter whether you're in a long or a short, it's going to be extremely hard to manage your risk. So for that reason, I'm not going to be doing much for Bitcoin here. I just want to wait for a raid now, right? Knowing when to sort of go for it proper, and then also knowing when to take a step back, I think is important for me. Moments like this, when I'm going to take a step back, just analyze, just let the price action resolve, right? That's what I'm looking at for Bitcoin. But all in all, is gone to this, you know, higher time frame consolidation block, and for now it's held, right, showing the significance of this block. Now, one of the things I want to do, let me just quickly go back to see if there's any questions, so on and so forth. Your concludes, how you doing, bro? Jasper, welcome in, guys. Welcome in. Hope you're all well. But yeah, that's the big difference between last cycle and this cycle. Don't get it twisted. This is an extremely important area, right? We have 9 months of trading activity that just wasn't there previous cycle. So people are looking at this like, oh yeah, you know, it's following last cycle to a T, ignoring the fact there was a 9-month period where people were losing their minds and their portfolios, right? Trading a very tight range. And I've been saying this since 2024. I've been saying this is going to seem like cancer now, but this is firstly, number one, time-based capitulation. That's what this was, right? And number two, even though it was so painful in the moment, right? You don't understand, 2024, this was so painful in the moment. What we were talking about was in the future, that will lead to, if it holds, right? That will lead to some extremely beautiful area in the chart where buyers can look at it, sellers can look at it, and they can be like, we need to take control of this area. It's like king of the hill, right? Whoever takes control of this area is going to dictate, do we go lower on Bitcoin or do we go higher? So right now, since we're smack bang in the middle of the area, the only long I have is a scalp to swing that's been open for a little while, and that was literally happened on the rate, right? It's this entry right over here. I've not closed that. I'm not in a short on Bitcoin currently because, again, there is no reason to be in a short where I currently are. I'm either going to short the raid, right? No raid, no trade. I'm either going to short the raid, or I'm just going to sit on my hands and do nothing. Capital preservation is the most important thing. I'm either going to sit on my, for now I'm sitting on my hands and doing nothing until the raid happens. And my bias is still a short. Don't forget, even though yes, strength is coming in locally, that looks nice. The trend is on, not on the buyer side. The trend is on the seller side, right? If you take a look at the trend, it's on the seller side. It's not on the buyer side. We are in a downtrend. Therefore, for that reason, rather, I'm not going to be too aggressive here. Just going to hold on to my capital, and unless there's a raid, I'm not entering a trade, basically. Does that make sense on Bitcoin, guys, before I move on? Will, come in, bro. How you doing, bro? Okay. Yeah, one of those moments. I mean, it's a nice candle, don't get me wrong. It's like, you know, it's nice to see actual green in the market, right? It's very nice to see actual green in the market. But relative to the seller zone, let's take a look. You're trying to get above, which is good. This does look like compression. One sec. Here. Something along this line, right? There you go. Which way will it resolve, right? I think lower time frame, I think it will resolve to the upside. So for example, right, if someone wanted to take a lower time frame scalp right now as we speak, you're doing so based on the fact you're above all your oscillators and you're above the mid of that weekly buy zone, right? So if you wanted to take a scalp, you know, this is why I'm saying I'm not going to do much, because even for a scalp, that is way too wide for me. 0.58% stop loss. Like you'd reduce your position size if you wanted to take this right now, right? And there's nothing, obviously, on the lower time frame. They could very easily do something like this before they go higher. Like, you know, things like this are very common, right? But if you wanted to take an opportunity right now, it'd be something like this. That's the only thing I can see you doing. You know, aim for the external highs, and if the external highs get taken, the real target would be around 74k. See what happens at the previous high there. But otherwise, apart from that, there's not much you can do. Because I'm talking, this is like a pure scalp, right? But on a higher time frame basis, as you can see, it is a coin flip, right? I would be very hard pressed to look at this and say, oh yeah, this is definitely on one side than the other. It's a coin flip, because no matter how strong this looks over here, fact of the matter is you haven't broken above the range. You haven't, right? You're still below your previous all-time, not previous all-time high, but rather previous impulse, right? The ABCDs, you're still below that. And things we haven't looked at yet, of course, is if I go to the crypto chart, is it this one? There's still that weekly above, right? If you're on liquidity rate, I'd want to do it somewhere within this range. And this. That was a point of control, I believe, which is why I put that down. But I mean, one nice thing is that you are above your previous all-time high, not previous all-time. No, sorry, you are above your previous all-time highs, and your 2021 like Standard Deviation 3, basically, right? So you're above that on Coinbase. What about on Binance? One sec. Where's the volume profile? Binance. What are you doing on Binance? What the hell? Get rid of that. Okay, this is what I'm interested in. On Binance, you are still up against your... I think one of the volume profile lines is on. Oh no, this is what we're doing for the scalping stream, isn't it? I was wondering what that was. Yeah, this was that point of control cluster we were looking at. Look, same thing. Nothing much has happened since then, right? On that point of control structure. Let me delete that. Let me delete this. So that was all from footprint charts. We look at fresh ones. On Binance, you are up at your Standard Deviation 1.5. You've not broken above it. Same reason why this happened, right? And you couldn't break above that. So it's just, this is what I mean. You've got so many resistances stacked against you, but you're also above some key levels. It's a coin flip. It's not like you're above everything you need to, so you know you can take a straight shot towards your liquidity rate. It's not like the liquidity rate has happened, so you can actually attempt to short. So it's, if you see tight RR opportunities like the one I just sort of put on the screen on the lower time frame, right? You can try and take it. Otherwise, just don't do anything. You don't need to be in a trade every day, like I've said, so just don't do anything. If you're not confident in this range, just don't do anything. Just hold on to your capital for a better opportunity. As we speak, we are getting some red in the market, I think. And of course, another thing to consider is, which I've not talked about yet, of course, US oil, right? We know oil is rocketing, and that is not good for risk on assets. It's not. Afterwards, sure, but not while it's happening, right? Oil looks like it's going to absolutely fly. So while that's happening, I wouldn't be surprised. And on top of that, can I just say, if you look at something like the S&P, right? Anything like this, major indices, they look like they're topping up, bro. They look like they could have a big drop, right? Their berry structures haven't been invalidated yet. So it's such a nuanced factor right now. Yes, you can attempt to trade this area, but just understand, if oil keeps pumping and indices take a shit, Bitcoin is going to have diarrhea, bro. It's going to dump. It's going to dump. It's what it is, right? Which is why, again, I'm not being very aggressive. In fact, I've been more aggressive with stocks than I have with crypto so far this year. You guys know that I've hardly called any cryptos out, right? Just stocks. But yeah, let's keep an eye on it, right? Lower time frame wise, you'll always get opportunities. But higher time frame wise, it's a coin flip. What's going to happen here? One chart you're above a particular key level, another chart you're not, depending on which exchange. So we just need to have a high volatility event that clears out massive amounts of liquidity, and then we need the dust to settle after that. When that happens, we'll have a way clearer idea of, okay, which side is actually taking the lead, right? Till then, it's just a coin flip on Bitcoin right now. Nothing inspiring, right? Nothing inspiring. Okay, so that's Bitcoin. Another thing, of course, is let's look at Ethereum. And one thing I would say is the reason I've been saying don't short this market here should be very obvious, but just in case, look where we are. Like we drew this on once we actually got there. We are at 886s, bro, right? This is a 886. We've got a completion of an M shape, right? This is a very, very technical bat, right? This is a bat. You've got a completion of an M shape. You're sat at your weekly oscillators, right? This right here is your, I want to say, I forget which one. I always forget which color I've got. One sec. The blue one is MA3. MA3 is the yearly, right? So you're at your yearly, and I know most people don't use this, right? This is just a personal tactic of mine. But most people are at the we've been at our yearly moving average, right? Consolidating at the yearly average. 200 is above you, yeah, 50 is above you. We know that VWAP's above you on the weekly. You're below key inflection area, very pivotal area. This is literally the reason why we entered that second time in 2025, right? For the challenge account on ETH, original entry was down over here based on footprint charts. Second was that reclaim, right? I give you guys 2 entries on ETH before it rocketed up last year. we're not above that level yet. We know how significant this area is. Just take a look, right? It is currently resistance. However, even in the face of all that, we have got completed M shapes and we have hit 886s. We know that is significant. Does that mean you need to buy right now? No. Lower time frame wise, you can trade this zone, right? You can trade it level by level. If I was to go to something like the 4 hours, as long as you're below that low, you're taking a trade to the mid and the high, right? You can trade this on the lower time frame, you can trade this, but on the higher time frame, just because there's an M shape doesn't mean I want to automatically take a trade. I'd want to see like moves up, you know, like confirmation that this is being recaptured into support, something like this, right? This was a beautiful PO3, right? Accumulation, manipulation, there's your distribution, right? Maybe something similar again. So Ethereum, again, you don't have to be doing much at the range we currently are. But if you're going to do something, especially for Ethereum right now, hopefully you can see it'd be a tight stop loss buy rather than a sell, right? Because the fact of the matter is you are looking to reclaim your key inflection area low. You're going to looking to reclaim your 23, 24, 12-month buyer seller zone low, right? So if you enter here, it's simple. You start turning this back into resistance, you have no business being in this. And you don't even have to use leverage for this. You can just use spot, right? To really maximize it. But as long as you're above this low, you're targeting what? The mid. If you get above that mid, you're targeting these highs, right? Look again, loss of resistance above you, levels that need to be claimed, which is why I'm saying for spot bids, for doing big bids, you've got more time than you think. Like layer out, don't just think in terms of levels, think in terms of time when you enter, which is why I gave you guys 20, 40, 40 entry model, right? Something I came up with myself, because you're incorporating time into that, incorporating trend into that, right? Trend is still to the downside, but you know, I like where Bitcoin and ETH are at, right? They've had drops, right? The reason that, you know, I flushed out the challenge account when we did is because key levels were lost, and that was my trigger that, okay, right, when this happened, right, when the 2.618 turned back into resistance, I'm not going to sit there holding thinking, oh yeah, this is going to reclaim, right? That is now weakness. We've had bearish divergences, we've had shifts of trend on the daily, the 4 hours, right? So that was the reason I exited the challenge account here. We started with 20k, it was about 63 at peak, and by the time I retired it was 42. Still a 2x, right? Yes, it wasn't a 3x like it could have been if I sold the top. But if I sold the top here, it would basically be, again, a coin flip of me trying to predict that the top would come in. There was absolutely no reason for anyone to be completely bearish up over here, apart from the fact that you feel like it might drop, right? But we had loads of technical reasons after this happened as to why I actually needed to exit. And I told you guys when I did, right? So that you guys could follow suit. It was your choice. I'm not going to tell you guys sell everything, but I'm going to tell you I'm selling everything. Let's say this challenge account, I'm taking profits, I'm retiring it, which is why I did that, right? But I like where we are, right? I guess I didn't like being in it then, but now since then we've had a 44% drop, right? 44% drop. And on a grand scheme of things, we've had what? A 52% drop. Now that is not a traditional bear market drop. A traditional bear market drop is lower, right? I.e., you know, you're looking at the 78.6s, you're looking at the 886s. But for a mid-trend bounce or something like this, like that's good enough, right? We're at significant levels. We've had a big drop. You know, I'm not going to be looking at and until we get a structural rate where risk to reward is amazing, sort of like what we did here, right? The reason I didn't short this entire range is because I knew there was a particular level I wanted, and in this case, it was the Coinbase. Standard deviation 1.5, right? I knew that was the level I wanted, and only when we got that and I saw that, okay, there's my key level, my thesis is we're gonna get a lower high here, and once my thesis was validated through footprint charts, right, that's when I pulled the trigger and took the short, right? Again, this was called ahead of time. You know, there's the significant levels, there's what I'm looking for, there's the entry trigger, there's the invalidation trigger, everything was given. I'm not gonna enter mid-range, right? I want a raid like this or something like that's what I'm after before I take another big sizable short. Till then, I'm not going to do anything because we are at support, we're holding key levels, so I'm just not going to do anything. Same with ETH, right? I'm not going to take any big size plays here currently, simply because yes, we're at 886s, we're also below key inflection areas, right? Structure needs to be on our side. Structure is not yet on our side, so you can take trades, but I'm not going to enter any big size spot positions yet, right? There's no point. I'll be trying to buy the wrong side of the V. And what is the first thing I teach you guys in session 1? Not the intro session, but rather the first session of core. I teach you guys buy the right side of the V, not the wrong side of the V, right? But all in all, like these things have completed 886s. Do not be surprised. You could get a pop up towards 2,600, right? Do not be surprised. telling you right now, do not be surprised. And if that is a move you don't want to miss, you better make sure you're giving your time to the charts to, every time like a claim like this is happening and you see a good R opportunity, you take that R opportunity, because you don't know which R opportunity could finally be the leg that gives you that pop up, right? So if you don't want to miss that move and you want to trade it, then just understand moments like this, you pay attention, right? In terms of trading basis, you don't have to pay attention when we're at the lows here, right? Because realistically, nothing's going to happen until some significant levels are overcome. But now that you're looking to claim the low of this, for example, key inflection area, right? You're going to make a move towards the mid if you're successful. If that's flip successful, you're going to make a move towards the highs. If that's successful, yearly levels, right? It's going to come quick once it does come. We know how crypto moves. So if that's a move you don't want to miss, again, pay attention. Have like a laptop or a phone out, and just have like the chart open or something. You don't have to look at it 24/7. Set some alerts, and every time that alert pings, just go on and see what kind of moves happening, right? Whether you're scalping, especially if you're scalping, that's how you make sure you don't miss that move, right? I'm not really fussed, even if it does go to 2,600. Obviously, if I can catch it, I'll catch it, but I'm not going to sit there on my screen 24/7, right? I've already made a lot of money so far this year from stocks, through Lemonade, through XT. So I'm not that fussed. I'd rather just preserve capital. I'm not trying to overtrade. I'm not trying to overstress, right? I'm not trying to overcomplicate it. So, but just understand, again, as long as we're above this on the lower time frame, this area here, here's your cluster. Any successful holds of this area, you just have a really nice R opportunity to take this to this level right here, 2,150, right? In terms of scalps. But everything seems to be having a nice little red pullback for now. Hype, still can't believe how strong it is. Insane. But we've already did the hype analysis, started this stream. Unfortunately, it wasn't recorded. I forgot to record, but you guys in the stream saw what it was. But basically, just as a quick recap, rid of those highs for short, right? Or you start flipping above that with structure to long, right? Otherwise, there's nothing to do here on hype. Like, there were things to do here, technically speaking, like, we had bullish divergence, right? I'm pretty sure we did, yeah. That bullish divergence is something we actually talked about. Bullish divergence at the 764786 of your 5th speed resistance fan. But right now, there's nothing. Just understand, trend has flipped to bullish on this, and technically speaking, on a weekly, it is an uptrend as well. Because the last level high that led to the lower low has been taken out and a higher low has been put in. And I can almost smell, if I go to hype here and I do this, let me do it in terms of golden pockets first. Was that it? No, that's deeper than a golden pocket. Oh, I think it's a liquidity rate maybe. No, even deeper than a liquidity rate. So this is deep. Okay. So the 87886, right? No surprise there. But yeah, if you can't get above any rate and you do this, then just you can sort of see that range in closing, right? Back towards 32 would be a nice area for hype. But yeah, I mean, I wouldn't be surprised if you start seeing volatility come back into the market, right? Many things have hit 886s, as we've talked about. I don't want to sound like a broken record, but many things have hit 886s. They've had deep retraces. Locally speaking, they've had deep retraces to significant historical structure on the charts. So we can't be surprised if it holds there and sellers can't overcome the demand. If we do get some sort of relief rally to the upside, right? We can't be surprised. Let's see, what else were we talking about? We were talking about Aave. We talked about this last stream as well. Let me go. So Aave was one. Yeah, we talked about this. Talked about the completed M shapes. Talked about the just general macro structure that Aave looks good, right? We also have completed M shapes on Aave here. Whether you look at it as a deep Carly, whether you look at it as a bat, right? 886s have been hit. So as long as you're above, in fact, let me go and make a very clear distinction. Let's do the bat first. 638, that's fine. I'm gonna go to the 886 one. Yeah, that's at the 886. 101.99. That is the bat 0.886. Let's make this white. There we go. And then the Deep Garli 86 is obviously going to be the same, right? But just to show you, there is two different wave structures taking us to this 886 area there, right? Same level. So that's an important line in the sand, 101.99. Pair that with the fact that there should be lining up. Yeah, there's always some sort of correlation around the mid of your weekly buy zone, which hasn't been tested yet. If Aave goes towards this area, right, 102.49, 101.99, and it holds, right, it holds, or you raid, you reclaim, that's a key line in the sand. That's areas where I look for scalp to swing longs. Right, just because it's so significant there, you can see, towards the bottom of your multi-year from 2020 demand line, right? M-shaped completions. So you guys know how important that is in terms of significance. So that would be an extremely important area for us to consider if anyone is looking to trade Aave. And I think, when Ether goes up, obviously I think Aave goes up, right? It's what it is. Aave is probably the number one DeFi protocol in Ethereum. So it's just a pretty, if you believe in ETH, like unless Aave actually goes under, you believe in Aave, right? It's one of those ones. So Aave is definitely something I'd look to at least have a swing position on. Even if no spot, at least have a swing position, right? Maybe like a 3x. Personally speaking, of course, I'm not telling you guys to open up swing positions, but I'm either going to allocate spot to it, or if I want to just go spot heavy in just a few coins, and then what I'll do is I'll use like the 3 to 5x range leverage to make up for it and just take swing positions instead. Probably 3x, because I can't be asked with the headache of a 5x swing position. But yeah, like there's loads. Sui, another one. Like still talked about this a lot, guys. But Sui still looks good. Like you're holding that point of control, right? From your low to high point of control. At key levels, there is your wave structure right there, completion, right? In fact, let me do this fresh for you guys. If I go to Sui, just take it from the top. Here, this is the old one. Wait, let me do this. This was a god tier Gartley on Sui. I don't know if anyone remembers this in 2024. Wondering why this happened. There was a god tier Gartley on Sui right there. I think I'm pretty sure you overshot the actual 1.618, but yeah, you went to like 2, 3 something. God tier M shape on Sui, and we're just looking to read that up. So the wave structure that I had put down is this one right here, right? The 618, the 886. 618. In terms of harmonics, in terms of your harmonic numbers, this right here is, let me just get it actually perfect. There we go. Oh my god. My chart OCD is kicking in 1 sec. There. Yeah, that's fine. And remember the harmonic optimum price. One of the numbers is 1.914 or something like this, right? So we front run that, but I don't care about that. This is liquidity rate. What I care about is this. There is a beautiful area here where the 1.618 is. So in terms of your measured move, there you go. This is your, this is not a deep crab, this is a normal crab. This is a crab 1.618. And of course we also have the 3.618 right here. So as you can see, beautiful little PRZ. One sec, 619. So let me just zoom in and just take it one tick up. Surely. Game changer, there we go, okay. And 0.8585. And this is your crab, 3.618. So all very bog standard. Look at it. This is why I said SWE is another very, very good if you want to get into spot SWE, right? And if you ignore the fact that this was a very, very clear engineer liquidity grab, by no means was the 10-10 dump normal, right? We all know, we all agree, 10-10 dump was not normal. It was coordinated. You know, it was a very coordinated dump. Some big shit broke, right? We know that. This is not normal price action. How do you go to the line? Look at it. Right? You ignore that 10-10 dump. This is perfect. Right? So you've got these insane areas, and not only that, of course, we know, not only that, just start doing some simple shit, right? Just gonna go to something like the weekly and just put down a bog standard demand line. There you go. What is there not to love about setups like this, I ask you? Why is it so easy for people to FOMO into SWE here? In fact, let's visualize this. Why is it so easy for people to start buying the shit out of this here and here and here and here? But why is it so easy for people to short this here? Where are the green dots? Where are the green dots? Obviously, there is going to be buying. Don't get me wrong, right? Obviously, the actual indicator itself is going to prioritize green dots on the way up and red dots on the way down to show you the amount of aggressive buying and selling. But look, we know, logically speaking, right? We know you do not short at this area, but that's what, right? Trading is not easy. Majority of the people who trade lose money. They don't make money. Majority of the people who trade don't know what they're doing, right? That's why you have huge market shorts and market sells opening up at the area where you should be buying. Realistically, right? Obviously, it's not financial advice, but if you're going to make any financial decision looking at a chart like this, it would be, okay, let me take a bet here because it's so easy to manage my risk. If I'm wrong, right? Especially when we were down over here, if you're wrong, you're wrong by percentage. Even now, as we speak, if you're wrong by maybe, what, 15%, right? If you want to have a really, really wide one, 18%, you don't need to go all in. Trend is not, structure's not on your side yet, so you don't need to go all in. You could throw in 30-40%, right? Let's say you've got 10,000. You could throw in 4,000 and then have 6,000 on the side waiting for that trend flip, right? Or to DCA, but should you have a stab lower again, right? Just enter over time. It's so easy, right? To just not do much, just buy and hold, right? In areas like this. You don't need leverage in areas like this. This is what we keep talking about. But again, we can't be surprised if this does have a pop-up from here. It doesn't even need to be a big one, right? We've been talking about this literally at the 3.618, right? But even from where we currently are, you could go straight to the smack. You could smack straight into the mid of this block. You could confirm it to be resistance, and you could have a, you could have a death. You could come back down, grind back down over time. Maybe go even deeper than this, right? And you would still make a 58% return from where you currently are. From when we first talked about this, it would have been about 77, right? Like, yes, we're in a downtrend, but that does not mean you just all of a sudden don't do anything. Like, when you have such key areas, you don't bid, right? If you want to bid, you bid at areas like this. SWE, ARVE, SEI, right? I don't know what SEI is doing. Let's take a look. Has it broken its low? Is it still holding? Look how easy it was, or rather still is, to manage risk on SEI, right? In fact, you could be out of SEI right now, right? It was that easy to manage risk. Let's say you bought SEI over here. Right, even if you bought, say, over here, number one, you wouldn't be going all in, right? Because obviously, like I said, 20-40-40, anti-structure's on your side, you don't go all in. Number two, the maximum you're going to lose, even if you went all in, is less than 10%, right? It's less than 10%. Look at how easy, and that's the thing is, you don't even, if you haven't sold yet, right? Let's say you entered and you see you're below this, then you, even manually speaking, you've got such easy invalidation now, right? You look at this and you say, okay, look, we are below that exchange listing low of 0.064 cents from 2023 on SEI. Until we can go and reclaim it, I'm not going to be in this, right? You can easily say that because, you don't want to be below it when you're creating a new low. But this could just also be like a bit of deviate, and then you reclaim, you enter back on the reclaim. It's not over, right? Not yet. But especially if we get that deviation to reclaim, say it's going to look beautiful, right? It's going to look beautiful. You're going to have a literal accumulation, manipulation, distribution sort of structure happening at the lows. At the lows, right? So if you wanted to take a bet, right? Let's say you haven't entered today, you're not going to enter it right now. You're below your exchange listing low. But if you're ready to reclaim that, you have an easy entry, right, on say. So there's going to be loads of cryptos like this, guys. We talked about TAR many times when TAR was at the yearly level, right? 162. It was super easy to manage. I said, look, as long as you're above that 162.818, you just hold. We haven't had a single candle body close below that 162 level, 2024 low. We haven't. It's been holding, right? So many things have had Aptos, right? If this thing ever reclaims a dollar, I'll look to enter that position on Aptos, right? Reclaim a dollar, look for however high it wants to go. If it reclaims a dollar, right? Even if it goes only to $3, it's still a 300% move, right? Obviously, there's hype. I'm not in this, like I said. It's what it is, because I was really hoping that we'd get some sort of back test to that. This very important cluster. We haven't got it. It's what it is. I'm not in hype right now, but I will trade it if I get a good opportunity to trade it. And that's just a few cryptos, right? That's BTC, that's ETH, that's SUI, say, that's Tau, that's Aave. There's obviously there's going to be more, right? There's loads of cryptos out there, but Litecoin, right? Don't forget, same thing. Deep Godly, 886. Deep Godly 1.618, both hit. Add PRZ, right? Historical price range mid. That right there held in line with the PRZ. The high time frame structure in LTC hasn't broken, in the sense that the argument's still there, right? You look at this on the yearly, you look at this on the 6 months. You're getting higher and higher and higher over time, right? Now, if this ends up being another higher low on LTC on the yearly, that further strengthens the case of why this could rocket up in the coming future, right? So there's many cryptos. Jupe, if I remember correctly, Jupe is another one. Yeah, another same structure as SUI. In this case, it's a deep crab, but 886 to 1.618, 2.0, deep crab structures right there, right? So it's completed, pivotal M shapes. We just need that sort of structure to be on our side, and we need accumulation structure. We need smiley faces. We need breakout from key levels to flips into support. We need seller absorption, right? Buyers being rewarded. That's the kind of signs we're looking for. If we don't get that yet, it's what it is, right? But that's also why I'm saying, if you're going to take a bet on these, especially if it's spot, you don't have to be all in. You can, if you're counter trading trend, you can always do so with reduced size to mitigate your risk even further, right? Remember, it's not about how much money you make. Going back to the basics, it's about how much capital you can preserve, right? You always want to have a shot the next day. Even if you take a loss today, you want to have a shot the next day. Your one loss shouldn't offset all your gains. Your one loss shouldn't put you in a position of crippling debt, right? Your one loss shouldn't put you in a position where you're compromised emotionally, mentally, right? You shouldn't do that. So let me move this tube up over here to the crypto section. Let me move LTC up to the crypto section. There we go. But that's just a few cryptos, right? I'm gonna look at one. I'm gonna look at Crow, because my bro Eriko asked me to look at that earlier. So we'll take a look at Crow. TNDM, that sounds familiar. Tandem. Let me take a look. One second. Let me catch up with the chat, gang. Yeah, we'll look at CRO. One sec. Focus. Alright, there's a lot of yearly levels, but let's simplify it so that we can actually get a... Let's open it here first. Is this for students? Is this the one? Yeah, it is. Okay, CRO. Now, the reason I'm using OKEX is because I believe it has the most data. Now, in terms of fibs, very simple. One line in the sand would be the 0.94, right? But let's do more than just that. So let's take a look. For saying this is on the weekly, I don't like how the candles look. The candle looks extremely low volume to me. Let's analyze. Let's take a look. We realistically need two yearly levels here. One is this one. Another one is the buyer-seller zone. And just between those two, there's more than enough data to manage this basically. There's another seller zone there, but that'll make it too tight, so I'll just leave it like this for now. Okay, and what else do we have? Well, apart from that, what else do we actually have on this shitcoin? Let's take a look. Macro fibs. Yeah, the liquidity rating is holding. That's beautiful. Okay, so one thing you can do is just look at it in terms of a liquidity rate, right? Here is your liquidity rate. Here's a rate. Here's a rate. Here's a rate. Here's a rate. You're holding the rate, right? So most people waiting for that 618 have been bamboozled already. And then there is that rate that we know is actually the pivotal area. So you can literally see that rate, the rate to rate range forming right over here. Lost that front run in this case, went to the liquidity rate. So as long as you're above the liquidity rate, one can easily manage a risk position over here. This would be more of a swing. Obviously, we've got a 12% stop loss there, so don't get it twisted. But you could literally just target one. If this rate holds, look to like rate that rate, right? You can see there's liquidity sat there. You're just looking for a shot of that liquidity. Buy seller zone right there. So something like a move to this mid would make perfect sense to me, right? Somewhere within this zone, basically between 0.11 to 0.12, something like that. Easy swing you could take on Crow, bro. You don't even need to overanalyze it, because if this is lost, we know what's happening. Historic price action tells us if this is lost, you're making a shot down for this level here. It's just going to happen. Literally every single time you've been below this, that's been the next level. You get below that, we don't want to talk about what happens to Crow, right? So you would, for now, you know, if you believe in this and you think, okay, I think there's a short in maintained structure, then this is the type of play you'd be aiming for on Crow right here. No problem, bro. Circle and coin. We talked about coin last stream, but I can go over it again. Let's 1 sec. Let me go to. As far as I remember, Coinbase is at higher time frame support. It was, yeah. There we go with M shapes. 886. You've got a completed bat. In fact, let me go ahead and put that down. So I'm gonna do this. There we go. So there's the completed bat on Coinbase. If we get a recheck to the bat, I think it'd be a really nice sort of entry. You've got your weekly 200, you've got your 2023 yearly level, and you've got that PRZ, right? It's a very nice area if you manage to recheck this into support. It's range lows as well. Range lows is held. But apart from that, yeah, it's a nice area. But apart from that, this is going to be again entirely reliant on does oil keep pumping? If oil keeps pumping, then indices, you know, that's typically a risk-off sign. Will indices take a hit? If oil pumps and indices take a hit, it's going to be red, right? It's not just going to be red for Coinbase. It's going to be red, obviously, for your metals too. Your metals have taken hits as well. We know metals have been outperforming for the last few years. They've started taking hits too, right? So Coinbase around that 177 area, I think is nice. 173. I mean, if you want to buy like stock here, if you want to literally buy it, your invalidation would be just lose the 200. If you lose the weekly 200, that'd be my invalidation. That's where I'd start to trim out, and I'd be fully out if you genuinely lost 150 because you've lost range lows if that happens, right? So just as how you can layer in into a position, you can layer out of a position as well. Something like that's how I tackle this. But yeah, apart from that, I think if we do get a oil stabilizing, and then we get indices actually not breaking down yet, then this could have a nice little rally, just like with Bitcoin, right? Just like with Bitcoin and ETH. If those two go up, I think Coinbase goes with it, right? It just goes. Maybe move up to that towards like the daily, 200 daily cluster, and then come back down, take that liquidity, put a lower high, come back down, something along those lines, right? Liquidity is what we're really talking about here. Another one I'll talk about is UPS. The reason I want to talk about UPS is because this is the area where I want to keep an eye on it. It's the original 886 2.618 off the bat, completed M shape. We've broken trend on the weekly, right? Last lower high that left the lower low has been taken out. There you go. There's your shift. And now we're just watching to see does a higher low come in. It could come in here. It could come in at the liquidity rate. It could come in at the 886 even, right? But the first sign is watch for a higher low to come in. If it comes in somewhere in the PRZ, that'd be beautiful. If it comes down to the yearly, don't mind. That'd be fine. But if whenever the high low does come in, I want to enter some UPS, right? Just because I feel like with this M-shaped completion and it being this close to a supply line, if the trend shift is legit and not a fake, then that could give us a nice little move up. Not to mention as well, of course, that we also have not circle. What am I looking for? I'm looking for the if I do this, one sec. Just map out the seller zone. We do have a nice structure here, right? There's your seller zone mid got tapped. You came down, but what have you done? You've created your U. So now if you can create that, your measured move from the point of breakout will take you up basically at 33% from the high. And wherever the high low comes in, that'd be a 72% move towards the actual target. I'm trying to front run a potential cup and handle basically, right? But yeah, let's see. But yeah, I'm keeping an eye on UPS. I know Jasper, you are as well, right, bro? Are you still in this one? The whole reason I'm looking at this is because you asked about it that one stream a little while back. No problem, bro. So yeah, let's see. This had the divergence too, lower low in price, high low in RSI. You can see this is a unique RSI that I use, but for most of you guys, you're looking at this one. Bullish divergence is there. Okay, so, but yeah, no, that looks good. BAYN, this one we caught a 63% move on this one, hit T2, currently at T1. Right, I wouldn't be surprised if we get a next leg up from somewhere around here, because now T1's been retested and currently is holding a support. So I would love for that macro 382 to hit, honestly. Just go take all that liquidity out, right? Right here, but BAYN, this was a beautiful play. What the hell? Oh yeah, because Hims, the production hell, I think they settled or something like that, which is why we got a big gap up. If Hims gives us a backfill of the gap, I'd be interested to get some of this. Another one I want to go over. I don't think my boy Block is in the stream, but he's the one who put this on my radar, and I'm in this one. I gave the entry the same time I entered IREN. Nebius, this one's been killing it. Stocks. Come on now. Yeah, this one's from the yellow box was the entry, right? Put this down because of footprint charts. But from entry, it is now up 43% on Nebius. So very close to T2. That deep Garley hasn't actually hit yet, right? But the Garley 786, that has hit. We have the 786. And we had the all of that insane. If you guys don't remember what happened here, it was this. If I go to footprint charts and I change the resolution to like 10,000. Oh wait, no, I mean 100. Sorry, should be enough. Yeah. The reason I gave this one was this right here. In fact, sorry, it wasn't even here. It was this. We had an insane absorption candle right over here, right? On Nebius, you can take a look. All of this was met with a huge amount of aggressive selling, right? This I pointed out. It was the same for IREN, but we had a huge amount of massive amounts of aggressive selling going on. come on, TradingView needs to optimize their UI. But huge amount of aggressive selling going on in this weekly candle in December 2025. This is in stocks chat, right? But again, look how we closed, right? Even in the face of all the aggressive selling, we're saying passive buyers won out because look, all your trading activity happened at the lows. By the time you close the candle, you've got a hammer candle, right? Bullish candle with low in price. What's there? Wait, one sec. What's their bullish divergence at this moment? I think it was on the daily or something like that. Yeah. Higher low in RSI, lower low in price. So daily bullish divergence. You had weekly absorption, right? So this was just a no-brainer play for spot. You just enter and you hold, right? And you retested, confirmed the absorption was successful, right? And you have another absorption candle where the previous absorption candle's value area was, right? Look, again, massive aggressive selling, held out. And then remember, just absorption isn't enough. If you want a higher time frame confluence, if you want a higher time frame confirmation, the initiation candle needs to be there. The initiation is there. As soon as the absorption candle printed, what happened? Massive green candle, massive green delta, i.e. aggressive buying was rewarded afterwards. That's initiation, right? So it's not a surprise that since that point we're up about 46-50% on Nebius. But this is, when we're reading price action, if someone reading just candlestick charts, I can't. Looking at just candlestick charts is not enough to get the full picture, right? You can see how helpful that is. If that wasn't there, all you would have is a hammer candle. And a hammer candle is nice, but you do not have all of this extra layer that is giving so much weight to the hammer candle, right? So much weight to the retest of the hammer candle. So much weight to the initiation, right? Without the footprint, you're not seeing that, which is why I absolutely love them. Doesn't matter if it's higher time frame, lower time frame. Footprint charts is one of the best things you can look at and understand in terms of trading, in my opinion. But yeah, Nebius has been killing it. So let's see what kind of reaction we get at 115 to 118. If it starts rejecting, I'll take some profits there since it is T2 and we have a massive sell side imbalance up there now. But yeah, I'm going to keep watching for now. Iron was the same thing, right? If you guys remember, the whole reason I gave this entry on Iron that gave us 70% was what? Same thing. Look at this candle. Huge amount of aggressive selling. 2,217,300 iron contracts were aggressively sold, right? And yet look how the candle closed. That is a hammer candle. Sellers took the price all the way down, buyers took it straight back up, and that is aggressive market selling versus passive buying. Market sellers are going straight into the passive buy wall, and the passive buy wall is slurping up all that supply. Same, literally the same, right? This is why I entered Nebius and Iron at the same time. I gave you guys this place at the same time. Look, December 2025. 15th of December 2025. Iron and this were doing, I don't know if you guys remember the stream. We went over this on stream, both of them, and I also went over in crypto chat. Exactly the same thing, right? So that's the whole reason the 70% move happened on Iron as well. And now Iron is getting his retest moment. So let's see what happens here. But on a higher time frame for Iron, I want it lower. Like I'm greedy. I think Iron, if you get the 886 or the 786 on this, 786 even I'll be happy with. I'm gonna slurp this up. I would want that. That would be amazing. So I kind of do hope it breaks and falls, right? Because it'd be amazing. I know Lior mentioned this first, like way back here, but obviously I didn't know what the hell Iron was back then, right? So I didn't enter this. But now that there's actual structure on the chart as well, like things I can look at. If we were to get this M-shaped completion, Iron would give us a beautiful bid. It would. Ah, yes, the inverted copper handle, yeah, bro. Oh, my voice is going. Genius Act in mind, effective date 18th. Oh, I'll take. I'm not sure what that is, bro. I'll take a look at that. The Genius Act that you've mentioned. For UPS. One sec. Let me compare that. If I was to invert the scale, one sec, I forget how to do that. I think it's right click on this and then invert. If I was to invert the scale, I can see it. But then that'd be bullish, right? That's a bullish argument since it's inverted. If we're expecting a breakdown from this, we're obviously expecting a breakout should it go back to the upside. Um, this one was another banger of a play. Colgate Palmolive gave this one in Stocks Chat, I think. Either Stocks Chat or just Spot, right? M-shape completion. M-shapes are just the truth, bro. They're so good. Looks like this. Hang on, let me just take this out to the candles. No, 886, 786 not hit yet on Klov, but if Klov hits the 786, best believe I'm going to be paying attention. Resistance, support, and it's medical, right? Medicals always get random pumps here and there. They just need to release another global pandemic when they need more money. They'll release another global pandemic. They'll put all their money in medical stocks beforehand. You know, they'll release some virus, blame me on China, and then they watch as their longs print. So Klov, I'm keeping an eye on. Some people were asking about STNE, so I went over this last stream as well, but basically I like this consolidation structure in STNE, right? If you look at the yearly, huge amount of consolidation going on. We're currently at the consolidation mid. As long as this mid area ends up being support, you can, you've got a very easy invalidation play basically. And the reason I pointed this out when I did was because STNE was threatening breakout when I pointed it out. It's right over here, right? If you obviously get above this, you can imagine your next target is all the way up here. It's as simple as that, right? But if we didn't break out, which is why the mid would be a target. If the mid is lost, you don't do anything until either you get to the low or you reclaim the mid. But that's the reason I looked at STNE. I still like, where it's at. I can't imagine all this consolidation will just lead to a decrease in price. I think at some point, the composite man's going to want his bags at higher prices to offload on the noobs, right? So STNE, keep an eye on it. Yep. I think that is everything I wanted to go over today, guys. Do you guys have any questions before I end this stream? I need to go. I did take my mum to the hospital, so I need to dash in about 8 minutes. Okay, yeah, that makes sense. If you guys are one-on-one, highly reserve and mostly declaring losing trust, can be some circle profit by legitimizing USTC, potentially driving massive loss from mainstream payments, which revenue derived from. Oh, that's pretty sick. Okay, so one sec. Let me look at. So Coinbase, obviously, we know even before this why Coinbase was good, but let me see if I should have Circle. Do I have Circle? No, I do not. Circle Internet Group. Oh, okay, I like that. Nice reaction. That is a trend change on the weekly. It was a shift in structure anyway. A pullback now would be highly appreciated for a higher low. Good on this. Nice, nice, nice. Thank you, bro. Right. Let's take a look. Log. Yeah, that's better. Retest this on log would be perfect. Do I see an M shape? Maybe, maybe not. Can I validate an M shape? 543, so one could just call it a 0.5, let's be honest. Yeah. 886 is here. Okay, so even though this wave structure currently holds no weight, it can hold weight depending on the price action we get here. So this is the B8 bat 0.886. So a retest of this is flipping resistance back into support. There is seller zones here, as we can see as well, and hopefully lines up with the breakout point. Yeah, it does. So something like this, right? So just something like this would be nice. Trying to figure out. On the other hand, if bullish divergence, that's sad. No bullish divergence. What about on the weekly? No bullish divergence. That's a surprise. Right, so massive supply zone is where we're currently at. That much is clear. Hang on. If we go to the yearly. That's better. Okay, 108.02. We've got a very clear line in the sand for now. Lining up with the VWAP. Lines up with this low. Nice. 4 months. Should I put anything on? I'll put one macro read on for the 4 months, which is the reason why we are rejecting. Okay, there we go. So that's the region we're rejecting. It's the 4-month mid. 108 would be your sort of lower time frame entry. That's the pullback. Obviously, you wouldn't enter here, right? If you know we're in between two key levels, you wait for that for entry, or you wait for your next key level to get hit. I'll just do that for now, and I'll do this for now. Here. And if that 108 is lost, I won't do anything until we basically get that 886. That area, that's the retest you want to really confirm it. Let's say this is the high for now on circle. In fact, I think you'd get away with a liquidity rate here, to be honest. So another 702. Yeah, the 702 would be nice there. But yeah, let's see. I'll keep an eye on this though, bro. Thank you very much. Chuck this one up over here and add this to focus. Okay, nice. Perfect. Alright, XT I think is going to go for all-time highs at some point. We're up 192% on this one, guys. If anyone took this, it's been an absolute cook this year. Insane. And again, above all-time highs, you just let it play out. You don't do anything. Is it too late to enter? Yeah, probably, right? But yeah, let's see what this does. Fundamentally speaking, XT was sound, which is the reason I gave it, right? It's the only company in the world that mines something called indium, I believe. I don't know if I'm saying that right, but US doesn't mine any of it. Indium is XT is one of the only company that mines it, right? So they basically have a monopoly on the whole market, and you need this for semiconductors, you need this for chips, you need this for everything. So you can imagine how big the monopoly is, which was the fundamental reason I gave it. But obviously, when I gave it in terms of TA, right? But yeah, XT has been a cook. Lemonade short was a cook. And I'm still kind of hoping this lemonade goes lower a bit, right? Just look at that structure, doesn't look bullish to me whatsoever, which is why I'm still in my position. I'm not closed it yet. It's like, you know, if I can run this up to a 6-figure position, I'll be very, very happy. And for me to do that, this will basically need to go to, even if you get a gap fill, yeah, that's £100,000 I reckon I made just on this one short. Less is more. Do you know what I mean? Less is more. You don't need to be in a million trades, just less is more. But yeah. But anyway, that's it from me today, guys. I just wanted to catch up because I've been really busy this week. I was in Brum for a few nights, seen some friends. No problem, bro. Oh, also, it's this, by the way, brother. Yeah, just gonna get a checkup done, bro. She's been feeling very bad, so want to see what's going on with that. But yeah, I know there's a few DMs I need to get through as well, so I'll reply to you guys' DMs. Hopefully tonight, but if not tonight, by the end of this week, I'll get it done. It's Mother's Day on Sunday, so I think I need to help my staff out and my businesses as well. because it'd be really busy. It'd be all hands on deck. But tomorrow, for people doing core, I'll just send a ping, but it's probably going to be around same time tomorrow. Like let's say 1 to 2, somewhere around 1 to 2 p.m. UK time for the next session. Rudy, you're the only person in here right now that does it. But if anyone else wants to join for a recap, feel free. By the way, obviously, like you guys are in the server, you guys, if anyone wants a recap, feel free to join. Just leave the questions mainly to the, unless you have like a very serious question, don't hog the mic basically if you're there, right? Leave that for the new group. But if anyone wants to join, feel free. But the buy seller zones lesson will be tomorrow. I think everyone here pretty much knows what my system is with buy seller zones. But obviously the new batch hasn't gone through the session yet, so that'll be sometime tomorrow. But apart from that, again, thank you very much, guys. I'll stop this recording here. I'll get this uploaded. This one I'll probably put on YouTube. It's been a while since I put something on YouTube, so I'll put this one on YouTube. And then I'll see you guys in crypto chat, right? But apart from that, love, guys.